All right, guys. So to help out the real estate community today, I want to talk to some more experts. So today we have with us the CEO of Panebianco Mortgage, Joe Panebianco, and one of the branch managers, Andy Craig. So Joe, a lot of hysteria going on. You guys had some crazy news last night with hundreds of closings on the book, and Pennsylvania decided to shut down. So can you just kind of share with everybody what's going on and how you guys are handling it?
Sure, I'd be happy to. First of all, thank you for having me on. It's a pleasure. So what's going on? So we are in completely unprecedented times. And what that means is that a lot of unprecedented things will occur. You'll see states shutting things down. You will see markets all over the place. So in reality, whether if you're watching things like the stock market or the bond market, there's a tremendous amount of volatility. No one knows where the prices of things should actually be. On any given single day, you're going to get multiple price changes. If you want to talk about stocks, you want to talk about mortgage rates, but let's focus on mortgage rates. You're going to see multiple price changes as the market tries to determine the risk, the liquidity, the ability to trade these things, counterparty risk. It's almost as if you had this anything that could go wrong with the market has sort of gone wrong. Now, I will take a step back and tell you that this is not doomsday type stuff. We are not in 2007, 2008. Our financial system is incredibly strong. Our banks are well capitalized. Our business partners, the consumer is entering this in a relatively strong position. And the United States has gone through a lot worse. I may be somebody who waves the flag too hard at times, but I will tell you that although nobody wanted this to happen, it could not have happened at a better time in the sense that the economy, the consumer, the banking system, we're all sort of at a good sport. We're as good a point as possible to weather this storm.
Okay. So, Joe, if you can share your history as well, you're not just, the owner of this company. You spent a lot of time in another career that kind of, to me, you are one of the best financial analysts I've seen discuss everything. So if you could share a little bit about your past.
Yeah, thank you for that. So my life spans two careers. I spent the first half of it working as an investment manager and portfolio manager for a fund manager in New York City and then later in Jersey City. There I specialized in mortgage-backed and asset-backed securities and was part of the overall corporate strategy team. I took those talents, if you will, for lack of a better word, to the mortgage industry. I had a friend whose father owned a mortgage company, and I immediately fell in love with the business. And I think what I fell in love with most was the people in the business. Wall Street has its place, and they do a phenomenal job. But I wouldn't say it was particularly set up to be culturally additive. But the mortgage industry has all the speed, all the intelligence of Wall Street, but it also has some really great people, and I think that's what I fell in love with. But it's been very helpful for me, especially in things like this when I needed some further insight into what's going on within the capital markets.
Okay. Well, we appreciate your insight. It's not often you get to have such an expert, to share with us, right? Normally, well, today, and Andy can attest to this, I can read 20 different posts with different mortgage companies saying 20 different things on, rates and all this other stuff. Andy, why don't we get to you? Why don't you share with everybody who you are and what you do?
Sure. Thanks, Matt. Yeah, I appreciate the time. Thanks, Joe, as well for that. I'm a branch manager with Panebianco. Our office is located right in Washington Township, right by the PJ Willahans. So for a landmark, those of you that aren't from the area, it's a well-known spot. So people know us for being close to there. But before I get started, I do want to say to everyone out there that is watching, Hope your families, your friends, everybody is in a safe place. I know this is, like Joe said, unprecedented times right now. And I think when we are in unprecedented times and come up against major challenges, really, really good things happen. And we're starting to see that. We're seeing a lot of good people, a lot of great people attacking this thing from all different sides, from a biological and a fiscal perspective. And we're going to get through this. We're going to get through this. We're strong. And I'm glad we're able to have a platform like this, Matt, that you're able to share and let people understand that folks like us, though we're hunkered down, man, we are working 24/7 or as hard as we can to be able to communicate to everybody out there. You know, Joe leading the company as the CEO and owner and founder of this company, we just got off of an all company call. So the 500 plus folks that work at Annie Mac or more, we're all on a call just like this. And Joe and the CFO of our company, our chief operating officer, let us know where we stand super strong as a company to be able to communicate well with our clients, our borrowers, our referral partners, all that good stuff. So, you know, we're blessed to be in that position. So Joe, on that end and handling all that and being the captain of the ship, so to speak, where do I come in? I'm forward facing with consumers every single day, talking to clients, folks that you're referring to us, and a host of other people. We're fortunate to have those conversations and that opportunity. It is unprecedented. It's a tough conversation to have with folks right now. Most people would think the market's in disarray, the stock market and everything else is falling. Why aren't mortgage interest rates? And Joe did a great job explaining that. And it's a simple supply and demand right now, where you have folks that want money, that want mortgage money, and it's just a little uneasy right now on the street, the folks that are providing that. So my job, let
me jump in here, just because you know there's going to be consumers watching this as well. So for all the people that said, oh, go get your lock your interest rate, and there was an announcement the Fed dropped the rate to 0. Can you explain what that actually means so people understand into going filling out advanced paperwork?
Absolutely, yeah, correct. I was just going to lead into that, which is great. So my job now is to educate more than ever. Okay, one of our mottos and our principles as a company is we believe you deserve more from the mortgage industry. Okay, so we want to educate as much as we can, and that's the calls that I'm having today, is educating folks. On Sunday, when the Federal Reserve said they were slashing rates to 0%, I must have got 50 text messages and emails saying, "Is my mortgage rate going to be 0%?" And I said, I wish it could be. I really wish it could be, but it doesn't work that way. So the Fed funds rate is totally, I don't want to say it doesn't have an effect on mortgage pricing. It could, but it does not. It does not in this instance. Okay, that Fed's fund rate was to create liquidity so that companies could continue to borrow money, or banks could continue to borrow money at a very discounted rate, and then continue to make payroll and do all these different things. We're hearing about that in the news. So it didn't have an effect on mortgage pricing. So right now, mortgage bond pricing isn't very strong. Joe just talked about that. So we're seeing some unsettledness there. So rates have increased. I had this conversation with a bunch of folks on the 2nd of March in the afternoon. I locked in the best rates I've ever locked in for folks in the history of the 18 years I've been in this business. Okay, on that afternoon. And starting the next day, Tuesday afternoon, up until today, that's continued to erode just based upon market conditions. And that's simply it, right? It's not the borrower. It's not Annie Mac. It is just the market itself reacting to what's happening.
And Joe, can you speak to that? Because it does make sense to me, supply and demand, right? And Andy said that earlier today. So I want to talk a little bit about, what the issues are and why rates are moving.
Sure. So first and foremost, if corporate America has learned anything, and investment bankers have learned anything from the 2007-2008 crisis, is that above all else, cash is king. So what you're witnessing for the initial few weeks of the stock market and the bond market is there are plenty of assets these people hold that they simply cannot liquidate. Municipal bonds, high yield bonds, corporate bonds. So when they need cash, what do? They go to the deepest markets there are, which is the treasury market and the stock market, and they dump, and they're selling. And you can watch CNBC or any of the other TV stations, and you will get some very large investors that will tell you, I can't quantify what the earnings of company XYZ is going to be, Therefore, I don't know what the proper stock price is supposed to be. So until we see the whites of the eyes of the end of this virus, we're just going to sell. That's it. We'd rather have cash than anything else. So then you get to other products, such as products that are spread off of treasuries, like mortgages, for example. And in an interest rate, in an environment where interest rates are almost likely going to stay low for some long period of time, you don't know what the servicing value of that asset is. You don't know how liquid it's going to be. There are no real huge buyers in the market right now because everyone wants to hold on to their cash, which gets back to Andy's point in terms of the Fed needed to come in and inject a tremendous amount of liquidity into the market. And now, if you look at the screens today, you've seen for the past 3 or 4 days that the market is finally trying to find a foothold. And the markets are going up during the day, and then towards the end of the day, they're generally falling off. And why is that? Because there are a bunch of people who still have not sold, and on any strength, these folks are continuing to dump. They're dumping stocks, they're dumping bonds, but that will end, right? As I said, we are not in a place where we were in 2008, for example, where people are selling because the world is coming to an end. We're in a spot simply, Wall Street is very good at pricing in risk. Show them any risky event and they will come up with the proper, or what they believe at the time to be the proper pricing for it. But when they cannot determine how long the virus is going to be around for and how damaging it's going to be, it creates an environment where you have very large swings, up and down, as different players are coming in and out to sell, to buy, to hold on to their cash, etc. So your expectation, the best thing I could tell your borrowers and homeowners, the expectation should be for the next 7 to 10 days or 7 to 14 days, while we're still waiting for the curve to peak and flatten out, you're going to see a lot of volatility in the market. So for a homeowner, what does that mean? Well, in all likelihood, if you believe at least the experts, and there's always those doomsday people out there, if you believe the experts, and I would quantify the experts as saying the folks at the CDC, the Bill and Melinda Gates Foundation, these folks who've been working on this long before this became an issue, will tell you that we are probably 30 days away from this, from now being more like China. And what I mean by China is it was 2 or 3 days ago, China opened up Shanghai Disney again, right? They're bringing people back to work. They're about at 85% capacity. So if you look at their trend and you look at our trend is actually less severe than what they saw, as should be the norm in a wealthier nation with more ability to social distance, more ability to throw resources at it. So in that 30-day period or so, we just need to, is there reason to be cautious? 100%. But is there reason for panic? Absolutely not. And panic only begets more panic. So, focus on your payment, not your rate if you want to move forward now. Make sure that, you're being very careful with who you come in contact with. I mean, quite frankly, the best thing you could possibly do right now is assume for a moment that you yourself have this virus, and then transact accordingly. Make sure you don't touch people. Make sure, because the quicker we as a species can sort of reduce the rate of contagion, the quicker our lives are all going to get back to normal, and they will get back to normal. There's not going to be a ton of devastation, and I say that with forethought because I understand there are a lot of people in the very short run who are either going to have to be forced to pull back on their hours or laid off. But if for the first time in, I want to say 12 or 15 years, we finally seen an environment where monetary policy coming from the Federal Reserve and fiscal policy is actually going to be working in tandem with one another. And by fiscal policy, I mean both houses of Congress and the executive and the president, they're all sort of working together to get something done for the American people. And I think it's a very positive move no matter how you look at it. So again, patience is virtual. Real estate prices, I would tell you, are not going down. There may be a little bit more of supply issue as some people maybe miss a month of payments or so, but that should be negligible. We have every expectation that once we are through this short period of time and then a small healing process, we will be back to normal.
Yeah, I agree with that. And Andy, let's get to the functionality of things. Me and you have a couple deals closing right now. As a realtor, I'm actually closing technically right now. And, I am experienced in selling real estate for years. So I know how to structure not to be at closing, how my sellers happen to be on this transaction. They were 70 years old. So I said, go meet the closer by yourself, sign off. They were with one person in a room for 10 minutes, sign their deed package. And today the buyer's in a room with the title company as well. And, I didn't want to go. And they actually called me and said, are you coming? I said, why would I come? Like, just email me documents I can sign and we're closed. So obviously that's changing in the market to continue to help us get closings through. And what are some of the other things that you're seeing and experiencing?
So it's happening so fast, it's unfolding so fast, but we're seeing a lot of great progress. We just talked about this on a call a little while ago, myself, Joe, and a bunch of the other leaders. So the Federal Housing Finance Agency came down and said Fannie Mae, Freddie Mac, the agencies, along with Ginnie Mae, which includes FHA, USDA, VA, right? All those types of different loans that our consumers are taking out. They're going to start electronic signing for mortgages, okay, at closing, right? Mobile notaries that are electronic. States are probably going to start recognizing some of these things. So we're very blessed to be able to be in a position where technology has always supported our business. But at this point, we're going to be able to deploy a lot of great things to hopefully not disrupt the flow, okay? You and I were just copied on an email a couple minutes ago from the relocation company, right, out in Oklahoma or wherever they were. Hey, what's the status of this? Everything's great. We're working remotely. Appraisal's in. Commitment will be out on Tuesday on time. All those good things. So technology is allowing us to speed that up. The closing portion of that, we're going to continue to do what the authorities are saying and the federal government, the social distancing. Hopefully, get to all that e-sign stuff. So we are at the forefront of that. We were actually on a call, not on a group call, directly with Freddie Mac yesterday, the agency. Our company was our chief operating officer, and they were talking about a lot of this information. So this is great. We're going to deploy it as quickly as we can. Our technology platform allows us to do that. So though no one was ever prepared for a moment like this, I think that a lot of companies, a lot of my colleagues that I've talked to over the past couple of days, I was on the phone with 3 different colleagues yesterday, different mortgage companies. We're all experiencing the same thing, okay? It's not unique to one or the other. Understand we're all under this same circumstance right now, but everybody's trying to do the same thing to be able to make it easier for the consumer. So we're flowing as much as we can.
Yeah, and Joe, from the owner's perspective, I guess, what seeing these laws get changed and implemented so quickly that normally would have taken years to get. It's been years. I did have a mortgage, I don't know, 5 years ago that we e-signed half of it at the closing table. Like, to see this get pushed through, what are you hearing? Is this going to be the new norm, or do you think this will just be a temporary fix?
No, I think we have entered a different world, and not just in our world of mortgages, but other worlds. So, for example, we're now clearly going to be moving much closer to e-closings and things of that nature. It could be everything from loan sales to the way business gets done. This was an all-world, or certainly all-nation test of how well our systems can hold up. As Andy was mentioning before, I'd be lying to tell you if we were preparing for this particular instance, because no one, I don't know if anyone saw this coming, but we have been spending a tremendous amount of time and effort on business continuity, what you might refer to as disaster recovery. What happens if our building gets shut down? What happens if power goes out? What happens if there's a huge storm, et cetera? What are we going to do with our people? So it's been extraordinarily helpful. And I will tell you, sort of somewhat laughingly, even on the level of our children, right? I can tell you right now that the days of my kids having snow days are probably over.
Yeah.
One, because we get no more snow, I guess. But 2, because now they can work from home and get their work done and continue and things of that nature. So those are 2 small examples. But yes, we're entering the new norm. This was what I call an accelerator. It's pushing a lot of technology to the forefront, and you can bet that it's going to be. So again, I caveat this by saying I understand there's suffering and loss, and I'm not making light of that. But out of all instances like this, there's usually more positives that come out in the long run. Another positive I'll say, just so I'm not too lengthy, is I honestly believe that they say it takes 21 to 30 days to form a habit. So by the time this is done, the possibility of spreading further germs and diseases is going to be much lower, because everyone's going to be used to washing their hands multiple times. Everyone's going to be aware of it. So it'll reduce sickness in the future. So yes, we are in the new norm. E-signatures and things like that are a part of it, and it's not all bad.
Yeah, I agree 100%. I mean, I've had, I truly believe that this is changing how everybody is going to go to work, how companies are going to see how much work is needed in office versus out of office through this. They're definitely going to learn what their employees do, and how often they need to be in the physical buildings. And again, the cleanliness thing, people are going to change their ways, maybe stop hugging each other and all that. But unfortunately, it is what it is.
I have a couple guys in my office who cringed at that last statement. They're big huggers.
Yeah.
I tell you, laughing, I will say that there are a couple people I really want to hug when this is over, and these are my children's teachers, because I don't have to.
Yeah, absolutely. All parents right now are very appreciative of the right now. So.
I think if my wife stays in the house another week with the 4 and a 5-year-old, she's going to create the vaccine for the virus. So like, just one piece of advice I'd give to everybody on the tails of what Joe just said. Continue to push forward from a qualifying perspective. Know that you're qualified. Okay, have conversations with your loan officer, whoever that is. Engage, get pre-qualified. Though the mortgage interest rate is an important piece to the mortgage puzzle, it's not the only piece to that puzzle. So you have to make sure you know what your buying power is, and how you're going to be viewed as a borrower from an underwriting perspective, from a guideline perspective. So we want to make sure that we're putting you in the best position as a borrower. So continue to reach out to us, continue to ask questions, all those different things. That's what we're here to do, because we know this period in time, though rough and hard, and it's going to be tough to get through, it shall pass. And when it passes, then there's going to be some opportunities for everybody. And we want to make sure, you want to make sure you're well positioned. So whoever it is you're working with, lender-wise, agent-wise, just make sure you're asking questions and make sure that you're prepared so that you can pull the trigger when you need to.
Right. That is absolutely the case. And I'll leave you with this one point. That's not mortgage related. It's life related.
Sure.
If you're watching the news all day long, disconnect. Get your news in the morning if you want, and get your news at night. But there have been a multitude of studies, you can look it up yourself, which shows that overexposure to any issue in the world is just going to cause greater anxiety, greater stress. Don't make this world any more stressful than it needs to be. It's great to be informed, but make sure you don't overinform yourself, because it's going to have negative implications on your work, on your home life. You're already stressed with probably too many people around your house as it is right now. So as Andy was saying and Matt was saying, focus on what you can control. You can work with your borrowers. You can focus on moving forward. You can collect docs. You can get everything ready, because, as I said, this will pass, and when it passes, you want to be ready.
Sure.
Absolutely. Yeah. And I'll, I guess I'll close with, my opinion is always work with an expert. If you're out there and, yes, you still, we're still putting homes on the market. We still have, I had a home go up last night. The seller has to sell their home. I couldn't wait 2 more weeks.
Sure.
And somebody's going to buy it. It's a nice home. So if you're in the market, yes, we as realtors are also flexing, figuring out how we can have less people walk through a home, and who needs to be present to walk through a home, and having sellers have their homes prepared so buyers can walk in and walk out without having to open doors, touch doorknobs, and all sorts of things. So we're flexing as realtors, but it always, I tell everybody out there, home purchasing is one of the biggest events in your financial life. Work with an expert.
Sure.
And that's why I'm, proud to be in business with both you guys.
Thank you.
And, you guys are fantastic. Actually, Joe, why don't you share with everybody how many states you're in and how big is the company?
Great. Yep. So, Panebianco, we are licensed in 43 different states. We have actual offices, and I think 32 of them. We have a large consumer direct division as well as a large servicing portfolio. We originate about $3 billion a year. We are a well-capitalized firm. Our warehouse line providers have some of the strongest balance sheets in the book. And we are a direct lender to Fannie, Freddie, and Ginnie. So although there are obstacles in the way of any mortgage transaction today, the obstacles for us would not be the ones that you would think of. Ours are the small ones, e-closings, making sure we get in line, follow Matt's advice in terms of who should be at a closing and when and the timing of it, et cetera.
Yeah.
But from an operational perspective, we are ready, willing, and able to continue serving our borrowers and business partners.
Yep, great.
Andy, any last words?
No, I would just say, everybody, it's hard to do, like Joe was talking about, watching the TV and media and all that kind of stuff. Just be patient, stay calm, stay close to your loved ones. As it passes, things will continue to get back to normal. It might not be the normal we may know. Things might change for us, just like it did after September 11th, right? There's major changes after September 11th. There was different security checkpoints we had to go through. I remember 30 days after that event happened, I walked through the San Francisco airport and there was National Guard everywhere, armed, checking people. That was a weird experience, right? It was a strange occurrence, but we've gotten through that. So just like this, we'll get through it. Life might change a little bit, but that's okay. We're an innovative country. We're an innovative world. So just, we all have to ride this thing out together.
Yep. How about you, Joe? Any last words?
Yeah, my last words are just a reiteration of what I said. This will pass.
It will.
And we will pass better for it. So again, I can't stress enough that your mental health is as important as anything else. But a couple tips for you. If you really want to try to, everyone knows how to fight the infection outside of the host, clean your table, wash your hands. But in terms of inside as a host, there's been a lot of science around the fact that raising your body temperature to about 102 on a daily basis for 10 or 15 minutes makes a lot of sense, assuming you don't have a fever. You could do that through exercise, through a sauna, through a steam room. Stay active, drink a ton of water.
Yep.
And make sure, for those who've heard me speak before, sleep. Sleep is critically important because your body can only fight what it has while it's at rest and resting. So if you take care of yourself physically, if you take care of yourself mentally, you're going to be able to turn that around and take care of the people you love in your life, the most important people, and better be able to serve your clients, your borrowers, and the people around you. They're looking for your leadership. As Andy had said, you need to educate these people, and you can't do it when you look like you just went through a whirlwind. If you stay well rested, well nourished, and you're taking care of yourself, you're going to follow through, and you're going to be the leader that your borrowers and your people need you to be.
Yep.
All right, awesome, guys. Well, I appreciate your time today. Thanks
Sure.
to everybody in the real estate world. And Andy, if you wouldn't mind, throw in the comments links to your websites and how people can get to you.
Sure.
The broadcast is over. You can jump on there and throw the comments in. So, again, guys, I appreciate it, and we'll be in touch again.
Perfect. Awesome. Thank you. Be safe. All right. Thank you. Bye-bye.
See ya.
Nice.